Another edition of our Lunch and Learn class on Tuesday at noon. I am Nicole Bacot, an IRA specialist, and I will be your host and speaker today. Today's topic is we're talking about our health savings account, or our Coverdell health savings account, and our health savings account. Very fitting title, Tax-Free Health and Education. Yes, you can. So let's just jump right on in. Let me make sure there we go. Perfect. So of course, we'll start with who is Quest Trust Company. Before we get to, of course, the main points, I do like to share, you can kind of see in the background, that is Quincy and Nathan Long, our president and CEO. That is actually at a Quest Expo from a few years ago. So they are the two brothers that actually created Quest. They are self-directed investors themselves. And so they really built the company on the client experience and what they were looking for in a self-directed custodian. So I just think that's a really neat story. So it truly began with them. So yes, we are the largest self-directed IRA custodian in Texas. We have over 20,000 clients across the state. Across the country. So no matter where you're joining us from right now, we would be happy to help you. And growing, 2.1 billion and growing assets under administration. Yes, we are about 100 employees now, 34, and that number is growing. Certified IRA specialists. We're really excited about that. And this is an interesting fact here. 400 million in undirected cash. And we're going to talk about this a little later, kind of how to use that undirected cash, but think of that as opportunity. So this is cash sitting in our clients' accounts, just kind of waiting to be invested, waiting for ideas, waiting for use. So keep that in mind. Of course, our disclaimer, this webinar, like any other webinar for Quest, is for educational purposes only. Quest does not give any tax, legal, investment, structuring, investment advice of any kind. Before getting into any investment, make sure that you are checking with your CPA, your attorney, your financial planners, your professionals. Make sure you're doing your due diligence on the investments and the people that you are investing with. All right, so what is a self-directed IRA and why do you need one? So self-directed, honestly, is just a marketing term, and it means that you are in the driver's seat. You are picking the investments. Here at Quest, we only hold private assets, such as real estate, promissory notes, etc. So you are telling us, hey, this is what I want in my account. So there's really no legal difference at all between an IRA here and IRA at any other custodian. They are managed legally the exact same way, same contribution limits. But at Quest, we have an open architecture platform to allow you to invest in private assets. So of course, why would you need one? Diversification. This adds great diversification to any retirement portfolio. And of course, in the private asset world, there really is just a plethora of things that you can invest in. Tax savings. Each one of our 7 accounts, you can grow your savings in a tax-deferred or even tax-free basis. Social investing, I really like this one. You can really see your own community or a community nearby really improve. You can, if you're doing like a rehab job on a house or something, you might be giving jobs to that community, or you may be, doing something like seller financing, where somebody normally wouldn't be able to get a traditional mortgage. Now you're giving, home ownership to someone. So I like that a lot. And invest in what you know best. This is really where you get to use your strong points to help you save for retirement. So if you really know about oil and gas, or real estate, or what have you, this is where you can use that information to help you save for retirement. All right, so we do have 7 accounts here at Quest Trust. They're broken down in 3 different categories. Our first category is our personal plans. So we have a traditional IRA. This is going to be your pre-tax money. This is the account that most 401k, 457, 403b, those qualified retirement plans get rolled into. So you'll probably see a little bit more of the traditional IRAs, but that Roth IRA is certainly not far behind. Roth IRAs are for after-tax funds. So you put after-tax dollars in the Roth IRA. You have that open for 5 years, reach 59 and a half, and everything comes out tax and penalty free. So that's really exciting about the Roth. And the traditional IRA grows tax deferred, meaning everything, all the returns that go back in the traditional IRA, you're not paying taxes on that now, but when you take it out for retirement, that's when you'll be paying those taxes at whatever tax bracket you're in at that time. And yes, you can convert a traditional IRA to a Roth IRA. We'd love to tell you more about that. We certainly have classes on our YouTube channel, or call your local IRA specialist. We'd be happy to help you with that. We have 3 employer plans, the SEP IRA, or the Simplified Employer Pension Plan. This is for employer contributions only. This one does have a larger contribution limit. So that's appealing to some business owners. The Simple IRA allows for employees and employers to contribute to the plan. And then we have the Solo 401k, has some bells and whistles to it, but also has a lot of responsibility. So definitely get in touch with us if you're interested in one of those. And today we're going to talk about these are specialty plans. And they are special. They're a specialty because they each have these very special things about them. So today we are going to be going over our health savings account and our Coverdell education savings account. I always hear this. I hear it called a Clover education savings account. So Clover, Coverdell, however you'd like to say it. So here's just a kind of a sample list really of some investment choices. The 3 main asset classes our clients invest in are real estate, private entities, and promissory notes. Really, this is kind of a short list on the screen, believe it or not. We have people that invest in cattle, oil and gas, all kinds of different things. So this is really just a list of things that you could invest in. Steps to purchase your asset in a self-directed IRA at Quest. Very simple process. First, get that account open with your IRA specialist. Our normal processing time for everything is 24 to 48 hours. So we'll get that open for you really quick. We can assist with that funding process for you. Locate your investment. This is where you get to have all the fun and locate that investment. Show us some supporting documents. We'll help you go through that. And then as soon as we have the documents in good order, we can go ahead and send out those funds. And now your IRA has an asset in it. So call us, we'll make that easy for you. Something else that I think separates us from other custodians is our endless education and network opportunities. So yes, it's great to have these accounts, but hey, what do I do with them? I'm so glad that you asked. So we have classes like this, Tuesdays at noon and Saturdays at noon, always having new speakers, new things about self-directed IRAs to help you be more educated. We really feel the best client is an educated client. So keep taking advantage of that. Our YouTube channel and Facebook has all of our old webinars that we've ever done, including playlists. So make sure you check that out. And of course, our virtual networking happy hour, the last Wednesday of the month. So tomorrow is a virtual networking happy hour. I will be the host. I make it really fun. So please make sure you sign up for that. Couple more announcements, and then I promise we're going to get to the real deal. So the in-person Quest Expo is coming back this year, and we're so excited about it. So it is September 23rd through the 25th. It will be at the Westin here in Houston. We are having over 30 speakers. People fly in from all over the country from this event. We haven't been able to have it, live in person, due to COVID. But we're so excited, so excited. So make sure you check this out. I gave you a 50% discount code up there. So it's just questexpo.com. You can read all about the event and get a discount code up there. So make sure you check that out. Oh, there we go. Technical. There we go. We're also coming back to our in-person events. So Houston office is the first Tuesday of the month. Austin is the second Tuesday of the month, and Dallas is the third Tuesday of the month. So make sure you are checking out our events page on our website to make sure you can sign up for these. This is a hybrid event, so if you can't make it in person, it's also going to be streamed live. Cryptocurrency is coming to Quest the beginning of April. So we're really excited about that. April 5th, we are having an in-person event in our Houston office. So make sure you come and sign up for that. And last but not least, it is the last day for this promo, guys. Last day. It is the Questy TwoStep. So if you open an account by the end of the day and fund it with at least $5,000 by the end of April, we will credit that account for $100 back. This is unlimited accounts. So if you open 5 accounts, we'll do it with all 5 accounts. But today is the very, very last day. So make sure you are contacting your IRA specialist. I'm going to show you in just a minute of how to get in touch with us. I had it all done. Give me 1 second, guys. All right, there we go. All right, so there it is. So you can email IRA specialist at questtrust.com. You can email me personally, nicole.bacot@questtrust.com. But make sure you are taking advantage of this amazing offer. It is the last day. We keep extending it, but we're not extending it anymore. So make sure you get in touch with us. We would love to help you out. All right. Oh, gotta get back to, there we go. Okay, so now for the topic at hand. All right, so who is really worried about what? So you can see the ages up there, the age ranges up there, and then the percentages of, what percentage of them are actually, what they're really worried about. So you can see in the not having enough money for retirement, 72% is in that 50 to 64. 72% is that 50 to 64 range. And of course, it's a big deal for everybody. We're still 68% in 30 to 49. Not able to pay medical costs in the event of a serious illness or accident. Also a big concern above 50 for all of the age groups there. Not being able to pay for medical costs for normal health care. You can see in that 50 to over 65 has the highest percentages, but still a huge concern from even 18-year-olds. Another big thing that people are worried about, not having enough money to pay for your child's college. Of course, this is probably going to be biggest concern for people age 30 through 49 that have kids in that age group. But still kind of a big concern for people 18 to 29. So these are the things that kind of people are worried about. We're gonna help you find some solutions to that. And so that's what we'll be talking about today, excuse me. All right, so how can Quest help you? I'm so glad you asked. Our specialty plans, so we call them the dessert accounts. So desserts are that special something extra. So it's the extra thing you need to help cover your assets, if you will. They have some great features, how to get the funds out tax-free and now. So I'm really excited to tell you about that. Here we go. All right, so first we're going to be talking about the health savings account, and then we'll be talking about the education savings account. So first, the health savings account. This is a qualifying account. So these are kind of the 4 things you need to meet before you can open one. Need to be on the high deductible health plan. And now that needs to be by, defined by your insurance company, not necessarily what you think is a high deductible. I know, oops, sorry about that. I messed it up. I know that, some people are like, well, gosh, I have, XYZ is my deductible, and I really think that's high. And, it is. But if it's not a high deductible health plan by your insurance company, that's not it. So make sure you're getting in touch with your insurance company and it falls under their definition of a high deductible health plan. Can't be enrolled in Medicare, can't be claimed as a dependent on someone else's tax return, can't really have 2 insurances or be covered on someone else's healthcare plan. If you do have an old health savings account though, but you don't have one now, like an active one, you can transfer the health savings account over to a health savings account at Quest. Just maybe not be able to contribute if you're not meeting these qualifications. Keeps doing that. All right, so the health savings account is actually what we call the best of both worlds. So the contributions to the health savings account are tax deductible, and the distributions are tax free for qualified medical expenses, and it really does cover a lot. So we're really in love with the HSA, of course. So what is a qualified medical expense? You can look up the IRS publication 502. Honestly, what's not covered is a shorter list. Cosmetic procedures, illegal drugs, those are, I get that. You have funerals, whatnot, but you can look in publication 502 to see what is covered. You can use it like at Walgreens to get like Advil, you can pay for copays, dental care, braces. I have a 12-year-old. We'll be going down that road soon. Eye care, contacts, appointments, glasses, prescriptions, all kinds of stuff. So it really does cover a whole lot of things. All right. So it is important, though, that you keep good records. The distributions, of course, need to, if you paid yourself out of it, that it really was for a qualified medical expense and you didn't just go, buy new clothes or something with it. And, of course, that it wasn't previously reimbursed by another source, by another HSA, maybe your spouse's HSA or something like that. Of course, you can only be reimbursed once. And then that you also didn't take that medical expense as a deduction on your taxes. So important things to remember there. Here's some fun facts about the HSA. And this is really, I think this is a really interesting feature. There is a one-time rule that with your traditional or Roth IRA, you can fund into the HSA up to the annual contribution limit to fund that HSA. I think that's really interesting. So even if, so I just really like that for an annual one. And it's a tax-free transfer. So that I thought that was really exciting. And you can also pay. So once the HSA is established, you can pay for expenses from that date on. So even if you didn't pay for an expense with your HSA, since it has been opened, you can retroactively go and be reimbursed for that. So that's exciting. If you use it for non-medical expenses, you will pay a tax. You must pay a tax and a 20% penalty if you're disabled. So probably not a great idea there. You can still, like I said earlier, you can still invest with your HSA, even if you're no longer able to contribute to it. So even if you have a balance in your HSA, but you can no longer make the contributions, no big deal. You can still invest with it the same way like any other IRA here. After 65, it kind of becomes like a traditional IRA. You can use it for kind of anything. Non-medical distributions are not taxed, are taxed, but not penalized. So nice benefit there as well for the HSA. All right. Again, best of both worlds. This year, we did get a little bump in the contribution limit. So if you have an individual insurance plan just for yourself, you can contribute $3,650 this year. If you have a family plan, of course, defined by your insurance carrier, you can contribute $7,300 this year. Both, either plan that you have, allow for a $1,000 catch up at age 55. So it allows you to get that extra $1,000 in. All right, so that was the HSA. We're going to talk about the ESA and then some examples about how to use them. So this is going to be tax-free distributions for qualified educational expenses. So this one's made with after-tax funds. The contribution limit is $2,000 per child per year. So easy to remember there. You can contribute to these accounts until the child turns 18. After that, there's no more contributions to the account, but they can use the account and the funds in the account until they're age 30. So of course, this can go into post-grad all the way up into, PhD. At age 30, there's still funds in the account. The individual may pass the account along to a younger sibling, younger relative, or really just someone under 18, or they can take a lump sum distribution, but it will be taxable because at this time now the individual is 30, they're an adult. So yeah, you can pass it along or take the lump sum. So the distributions, again, tax-free for qualified educational expenses. And there's a lot of those, especially since COVID. It covers a whole lot more. So IRS publication 970 will tell you what's covered there. So you can see that I've listed some. So before COVID, like Wi-Fi probably wasn't covered, a lot of those kind of things, but Wi-Fi, tutoring online, those sort of things, a lot more of that is covered now because, out of necessity, it kind of had to be. It doesn't cover babysitting. I have looked and checked. It doesn't cover babysitting. It doesn't cover team sports either, or like clubs, but it covers a whole lot. Transportation, extended day even. So it doesn't cover babysitting, but if extended day is offered at the school, an accredited school, extended day is covered. I did look that up. So that's really exciting. It covers a whole lot there. All right. There's also, of course, the 529 plan that people have to save for education. Of course, nothing wrong with it, but just as it compares to the education savings account, not fully tax deductible, depending on the state tax. The state specific rules are, very different. The not able to self-direct, so, you couldn't bring it here. You'd have to invest in publicly traded assets. Contribution limits set by the state, so, not the same there. And then more limited investment choices. So again, nothing wrong with it. It's just different. Okay, so specialty plan benefits. So you can benefit from them today. Pay expenses with tax-free dollars. You can take tax deductions. This is from the HSA. And then fund with a retirement account. Like we talked about that special the special rule that the HSA has. So these have a lot of benefits. So not only can you benefit from them today, so you're also investing with these accounts, right? And you're growing their balances. So you're also investing, so you're growing them, but you're also paying for all of these things tax-free. So while you're growing them, while the balance is growing, you're still able to take these. I just think these are really neat accounts. So let's look at some case studies and kind of what happened here. So Andy wanted to pay for his daughter's school tuition by doing a wholesale deal in her ESA. So he opened the account, made $100 contribution. Now wholesaling is a different kind of real estate technique for those of you who may not be familiar with wholesaling. So the offer, though, was accepted with only $10 earnest money. He sold the contract 8 days later sorry, I don't have my glasses. I had to look at my other screen for $13,400. So within 24 to 48 hours, he was able to pull out the $8,500 he needed to pay for his daughter's education. Now, does every investment happen like that, where it happens in 24 to 48 hours? It does not. But it does show you that you can do regular investments like you would in any other IRA account to make these balances grow. I wanted to show you something else too. This is partnering. Now you can do this with any account at Quest at all, but I do think this is a very neat strategy for growing small accounts. So this was actually 9 Quest IRAs that partnered together for this investment, and it was a note investment. So the highest amount was, I think, $79,000, and the lowest amount of this was $3,000, and it is an ESA, but in there you'll find an HSA as well. So again, not limited to notes. You can do this with any asset classes. Partnering is what I mean. And the deal with partnering is that it just has to stay a parallel transaction, or the percentages must stay the same the life of the asset. Now, it's going to take some work to figure out exactly how much percent of each one of these nine accounts, what percentage they put in. But so whatever percentages you are, they just have to stay the same. So any expenses that come up with the asset have to be split the same way as the percentages. And then any income that comes back to the investment has to stay the same between all those percentages. For an easier example, let's just say it's 2 IRAs. Let's say your traditional IRA and your Roth IRA. Let's say you bought a rental house in the IRA. Now it needs some new plumbing. So you get the bill in. So your traditional IRA is going to pay 50%. Your Roth IRA is going to pay 50%. Now let's say you're getting rental checks on this same house in your IRA. And it's $1,000 a month. $500 is going to go to your traditional IRA. $500 is going to go to your Roth IRA. So same for expenses and same for income. So the percentages have to stay the same for the life of the asset. And that's how partnering works. So that's what these 9 IRAs did. So you can see that people with bigger balances, people with smaller balances, they all could participate in this investment, and that helps those smaller accounts grow. So I just think that's really an exciting thing to do. This was something they did in the first lien position. If the borrower defaulted on the property, so this was secured, they would get the property. So the value of the property was $158,000, $157,000 note, 12% interest, 1-year maturity. So the profit was, I'm sorry, I don't have my glasses. It was $18,840. So they had to split that 9 ways according to the percentages. But little by little, that's how you do it. So I really thought this was an interesting, a great way to kind of build those small balances. And again, you can use this in any sort of account, not just ESAs or HSAs, but all 7 accounts that we have. All right. So now what do? You have all this education. We have told you about the HSA, the ESA, what you can do with it, the contribution limits, how you can get money out now. So we'll go back to that example. So let's just say you were in that position. So you had this $3,000 account, you did this partnering, and now you have, let's say, even a $4,000 account. And now you need money now. You need money to pay for medical expenses, for kids' education expenses. We remember how expansive both of those plans cover. You get to take that money out today, tax-free. That's really exciting. And you get to save it all. That's just really exciting. So what do you do now? Now you call us. Now you open an account. Remember, is this right? Today is the last day. Today's the last day, guys. Today's the last day you can open these accounts and get your $100 account opening fee credited back to you. So HSA, ESA, any kind of account it is you're needing, make sure you're contacting us. You can open these accounts today. You know, when you get your credit back, it will be for free. So that's what you need to do. It's great to take these classes and it's great to see these webinars and get the education. But what really matters is what you do with it. I am just as guilty as the next to have, you know, you get so nervous and you want to collect all this information and make the right decision. And what do I do? And sometimes you just kind of have to jump in, and start. A lot of people that I've interviewed that are guest speakers on our webinars, almost all of them have said, only I wish I had done this sooner. And hey, just get out there and start. So here is your opportunity to just get out there and start. I think we have one more slide that gives a little more contact information. Oh, it was just the slide again. So there it is, 2-step 22. This is the contact information I wanted to share. So you can go to our website, chat with us live. It really is us, the IRA specialist and the transaction specialist. It's not a robot. We'd be happy to help you. Give us a call, 855-FUN-IRAs. We really do think this is fun. We really are discussing tax code in the hallway. We think this is really exciting. Give us of course, email us. You can email me directly, nicole.bacot@questtrust.com, or email all the IRA specialists at IRA-specialist@questtrust.com. I'm going to put it up again because today's the last day. I don't want y'all to miss this, guys. This is the last time. We did extend it, but today really, really is the last day for this promotion. Open a new account, fund it with at least $5,000 by the end of April, and we will credit said account for $100. Last day of the special, guys. So take the education, do something different, do something with it, take the plunge, open an account, call us. We're happy to help you out. Let's see. I think I had, nope, that was the end of the slides. So I leave you with this. Thank you so much for joining us. Oh, well, let me ask Sarah if there are any questions. Sarah, do we have any questions?
We sure do. So I'm going to go ahead and remove myself and I'll add them to the screen for you.
Oh, great. Now you have some time to think about it while we get to the questions. Okay. Can you keep track of education expenses to reimburse at a later date from CSA, as you can do with keeping house receipts? Thank you so much. You can, yeah, it works like that. Keep track of educational expenses to reimburse at a later date. So it does work the same way as long as that account was open before that happened. So you can't open the account in April and be reimbursed for something that happened in like January. So as long as that account was open at the time of the event, yes, you can go ahead and reimburse yourself for that. Thanks so much, Iva. If you're over 65, do you pay tax on health-related payments from the HSA? You do not. And I'm guessing that's a qualified medical expense. Health-related payments from the and over 65, you're not taxed you're not penalized anymore. It's just taxed. If it's a non-medical distribution over 65, that's only if something's non-medical. So if no matter what the age is, as long as it's a qualified medical expense, it's going to be a tax-free distribution. If you're over 65, still, if it's a qualified medical expense, it's going to be tax-free. If it's not for a qualified medical expense and you're over 65, you will be taxed but not penalized. I hope that answers your question. You can put another something in the comment box. The end of it says trees, if that wasn't really clear.
And I love this next question because it's kind of going along with what we've been talking about, but how much does it cost?
Perfect. All right. I'm happy to discuss the fees. So typically it costs $100 to open an account. Well, it still does. But we have that great special going on to where we would get it credited back. It is $125 to process the transaction or purchase an asset, however you'd like to think about that. That covers our transaction specialist going over the supporting documents, making sure everything is in the name of the IRA, as the IRA is the investor, buyer, subscriber, what have you. And as soon as those documents are in good order, we can send the funds out within 24 to 48 hours. So that is what that $125 covers. To send the funds out of the IRA to fund your investment, you can choose from a wire, which is $30, a check, which is $5, or an ACH, which is free. We have two options for our annual custodial fee. Option one is $350 per year per asset. And option two is regardless of how many assets you have, and it's based solely on the market value, and it's on a tiered scale, and it's charged quarterly as opposed to annually. If you go to our website, questtrust.com, under forums, the fee schedule is there. And we're happy to, if you want to call an IRA specialist and help you decide what would be more cost effective, option one versus option two, we'd be happy to help you with that. And you can change the fee schedule whenever you want. There's no fee to do so, no time limit or anything like that. So I guess to answer your question, I guess it would depend on if you're on option one or option two. But I guess that would answer your question. But yes, we will credit you $100 back. Oh, thank you, Miss Sarah. All right. Well, thanks so much for joining us today. Thanks for the questions. I really appreciate it. Hope you learned something new. Of course, get in touch with us. We really, really, really want to help you open those accounts. Yes, I am hosting the happy hour tomorrow. This is the virtual networking happy hour that happens on the last Wednesday of the month. I make it really fun. Come have a drink with us, 6:30 Central. Come meet new investors. Come get some contact information. Since it is virtual, we have the chat box for Zoom, so we can share some contact information. It'll be really fun. So do something different today. Take that action. Make the next step. And I really appreciate you being here. And thank you so much, and have a great afternoon, guys.